Hey everyone, welcome back to Corporate Decoder, the place where we learn about what is really going on behind those fancy corporate announcements. Today we're diving into a financial report that might just reveal a few things about how PennyMac Financial Services is doing. And let's just say sometimes the numbers tell a more interesting story than the press release. Before we get started, if you like getting the real scoop on corporate filings without all the jargon, make sure you are subscribed. And hey, we've got a growing Discord community where we break down these reports even further, so definitely check out the link in the description below. So what we're looking at here is a Form 8K filing, which is basically like a company saying, hey, something important just happened and you need to know about it. For PennyMac Financial Services Incorporated, the big news is all about their financial results for the quarter that ended on the 30th of September 2025. They've put out a press release and a slide presentation to go along with it, and we've got both of those attached to this filing. PennyMac is a company that is involved in mortgage lending and a bunch of other financial services. Think of them as a big player in helping people buy homes. Now, when a company releases its financial results, it is like a report card for how well they've been doing. Investors, analysts, and even regular folks who own a piece of the company through stocks want to see if the business is growing, making money, and managing its operations well. This part of the report is all about the juicy financial details. PennyMac is telling everyone how they made money, how much money they spent, and what their overall financial health looks like for the recent quarter. It's not just about saying we made money, it is about the details and what those details mean for the future. They highlight that these details are not supposed to be seen as if they are filed for certain legal purposes, which is a common disclaimer to protect themselves from certain liabilities. Think of it as them saying, here are our results for now, but don't sue us based on this specific disclosure in this exact format. The press release is usually the company's way of summarizing the highlights. They'll likely be putting their best foot forward here, pointing out the good news and framing any not. So good news in the best possible light. It will probably mention key financial metrics like revenue, earnings per share, and maybe some specific business segment performance. This is where you want to look for the headline numbers. Then we have the slide presentation. This is often more visual and can provide a bit more depth than the press release. Companies use these presentations for investor calls, and they often include charts, graphs, and more detailed breakdowns of their financial performance. This is a great place to spot trends and get a feel for the management's perspective on their current situation and future outlook. If you are trying to understand the story behind the numbers, the presentation is a critical piece of the puzzle. Looking at the press release dated the 21st of October 2025, which covers the quarter ending the 30th of September 2025, we're trying to see if PennyMac is growing its business or if it is facing challenges. In the mortgage world, things can change fast. Interest rates, housing market conditions, and competition all play a huge role. So when we see their results, we're asking, are they originating more loans? Are they servicing more loans profitably? And are they managing their expenses effectively? A strong showing here would mean they're navigating the current economic landscape. Well, a weaker one might signal headwinds that could affect their future prospects. The slide presentation is where we can really dig in. They usually present key financial figures here. For instance, we'd want to see their total revenue and how that compares to the same quarter last year. If revenue is up, it's a good sign, potentially meaning they're either doing more business or commanding higher prices for their services. Conversely, a drop in revenue could indicate a slowdown in the housing market or increased competition eating into their market share. We also want to look at their net income, which is their profit after all expenses are paid. Is it growing, shrinking, or staying flat? That tells us a lot about their operational efficiency and pricing power. Now, beyond the numbers themselves, we're also looking for what PennyMac is saying about these numbers. Are they optimistic about the future? Are they talking about new strategies to boost growth or cut costs? This is where you can sometimes get clues about their long-term direction. For example, if they mention expanding into new loan products or regions, that is a strategic move well one to watch. If they're talking about cutting expenses, it could mean they're trying to shore up profits in a tougher environment. And who is signing off on this? Daniel S. Perotti, Senior Managing Director and Chief Financial Officer. His signature means he is attesting to the accuracy of this report. It is always good practice to see who is taking responsibility for these financial disclosures. If things go south later, his role could become quite significant. So, what is the overall picture we're getting from this filing? PennyMac Financial Services is giving us a snapshot of their performance at the end of the third quarter of 2025. It's their way of communicating with the market, and it's our job at Corporate Decoder to translate these filings into something understandable. We've seen the type of report and the documents attached to it. Now, the real work is in scrutinizing what those documents actually say about the company's performance and its future. Looking at this filing from a broader perspective, PennyMac operates in a highly cyclical and competitive industry. The housing market is influenced by economic conditions, interest rates, and consumer confidence, all of which can change rapidly. This means that even with strong results in one quarter, the company faces inherent risks. Their success is tied to the health of the broader economy and their ability to adapt to changing market dynamics. What we need to see is evidence of disciplined growth, effective risk management, and a clear strategy to maintain profitability, even when external factors become less favorable. Ultimately, the numbers and the narrative within these documents will tell us whether PennyMac is a company navigating choppy waters effectively or setting sail for smoother seas. It is all about finding those concrete details and understanding their implications for investors and the company's long-term trajectory. Alright, that is our quick decode of this PennyMac Financial Services filing. What is your take on what their financial results might mean? Let us know in the comments below. If you found this breakdown helpful, please give it a like and subscribe to Corporate Decoder for more insights into the world of business filings. And don't forget to join our Discord community for even deeper dives and discussions. Thanks for watching, and see you in the next one.